Families, look closely at this proud sapling. It has a tall trunk and eager leaves. It reaches for the sun with passion. But look at how it trembles. One gale, one sudden shift in the wind, and it snaps. Now, behold the unbreakable tree.
African wisdom tells us, when roots are deep, fear no wind. The baobab endures the century storms because no single root is responsible for the whole. It is a thicket disguised as a tree.
What we built this week starts here. On Tuesday, we saw that the surge on your magic map requires stretch patience. Today, we move from growth to architecture. If you want to survive the next decade, your roots must diversify. And quick note before we go deeper, this is education, not personal financial advice. Always check with a qualified advisor before changing your portfolio. The data is stark. Single stock portfolios can crash 50% plus in a bad year. Diversified forests, a 15% dip is survivable. There is a proverb for this. Rain falls on every roof. If you only have one basket and it floods, you have nothing.
3 traps are currently snapping family legacies. 3 lanterns will help us build unbreakable forests. We have included a quarterly audit in this session. Pause this with your family, because legacy starts right now. Trap number 1, the single trunk. This is the all eggs, one basket fallacy. Whether it is your house, a single crypto coin, or even a high-paying job, if that one trunk cracks, the whole family topples. By 2025, data shows many families are house rich and cash poor. A single redundancy or divorce can double the risk of total collapse. Family offices learned this. They're reducing venture capital concentration, 31% down to 26%, and spreading into debt financing and real estate, 14% up to 18%.
The math is cold, Rachel, but the psychology is colder. We fall in love with our single trunk. The yam farmer planted only yam. The yam was king, but when drought came, the king died.
I remember that farmer. His neighbor planted millet, maize, and cassava. They didn't grow as tall, but that family feasted while the king's house went hungry.
The baobab has no single trunk. It is many trunks fused into one. Your portfolio must be the same.
Trap number 2, the lopsided canopy. This happens when you are overweight in one volatile sector. All tech? All AI? In 2022, the tech wipeout saw a 30% drop. Families who had bonds to cushion the fall survived. But here's the 2025 twist. Family offices are now trimming private equity, 22% down to 18%, and moving into developed market equities, 24% up to 26%, seeking AI and healthcare growth.
Remember, a hasty mother makes a weak child. You must balance your classes. Your stocks are the trunk, providing strength. Your bonds are the shade, providing stability. Your alternatives are the fruit.
If you had $50,000 all in one high-growth stock in 2022, you might have seen a 65% loss. If you were diversified, 12% loss. That is the difference between a minor setback and a permanent exit. And now, 74% of family offices are exploring cryptocurrencies, but the wise ones allocate only 1 to 5%, not 50%.
Trap number 3, shallow roots. Are you local only? If your roots only drink from one puddle, one currency, one country, then a single storm in that land uproots you. Whether it is the pound, dollar, or the naira, every currency has its season of drought.
This is a major 2026 trend. Some family offices are moving significant allocations into Asia and emerging markets, while other regions retrench domestically. Families stuck in single geography often lag because they're betting their entire future on one weather system. And here's the home bias problem in plain terms. Domestic deal counts can rise year to year and still leave you exposed. When the local currency crashes, your dollar-denominated assets can bloom.
The baobab drinks deep from many sources. Families must do the same.
That is how you turn a crisis into a season of growth.
And remember, deep roots are quiet. You don't feel them working until the wind comes.
We are halfway through the architecture of the Unbreakable tree. If this is helping you see your financial forest differently, please subscribe to the channel and hit the notification bell.
It really helps us to keep creating these deep dives for you. By liking and commenting, you tell the algorithm that wisdom matters.
If you want to see more of the woods and the command center, your support is the rain that helps us grow. Now, let's light the lanterns.
Lantern number 1, deep asset roots. This is about class balance. Think of your portfolio in 4 parts. Stocks are your growth trunk, 60%. Bonds are your stability shade, 25%. Property is your fruit, 10%. Cash and alternatives are your water, 5%.
For a $10,000 starter portfolio, that looks like Global Index Fund 40%, Bond ETF 30%, REITs 20%, High Yield Savings 10%. In 2022, this model was only down 10%, while all stock portfolios were down 25%. But 2025 update, family offices are adding private debt, doubled to 4%, and hedge funds, 31% use them, for diversification. The 60-40 split is evolving. Now it's 60-30-10 with alternatives.
I knew a widow whose single farm failed, but her heirs learned. They bought a forge, a fishing boat, and a grain store. 3 generations later, they still thrive.
A single seed is hope. Many seeds are security. Lantern number 2, branch worldwide. Your roots in London or Lagos might be deep, but your branches should reach for the US, Asia, and emerging markets.
The forest sees each tree's place. You must hedge your currency.
Exactly. When the local currency crashes, your dollar-denominated assets bloom. Latin American family offices now hold 26% in developed market fixed income, not because they love dollars, but because they fear the drought. And for the next generation, 58% of family offices use or consider art advisors. Luxury assets, watches, art, sports investments are increasingly treated as inflation hedges.
Translation for families? Don't let your entire life depend on one country's weather. Lantern number 3, the Twig for tomorrow. This is about legacy. Dynasty trusts, generation-skipping trusts, and strategic gifting, using the $18,000 annual exclusion, US 2024, are tools some families use to reduce estate tax exposure. Charity and impact investing provides shade for the whole community. But note, only 30% of family offices are in impact investing versus 50% of institutional investors. The next generation will change this.
There is a proverb. The best time to plant a tree was 20 years ago. The second best time is now. Does your current forest provide shade for Generation 3? If not, you are just a tenant, not an owner. Irrevocable trusts, once established, cannot be changed, can provide stronger protection against creditors and estate taxes, jurisdiction dependent. This is the deep root that outlives the storm.
If you don't plant for those you'll never meet, you're not building a forest, you're renting a campsite. Every forest needs a root audit. Here is your framework for the weekend.
Step 1, inventory. Put everything in a spreadsheet. Step 2, the pie check. Do you hit the 60-30-10 target? Stocks, bonds, alternatives. Step 3, the storm test. If you removed your top earning branch today, would the tree fall?
In the village, the Baobab is audited by the elders every season. Your family must do the same. Run this audit quarterly.
Your behavioral trigger. Plant 1 new root this quarter. Even if it is just a $50 deposit into a new bond ETF or a $100 crypto allocation, start the growth. And to be crystal clear, if you're in the UK, treat the exact products as examples. Choose what matches your own risk and regulation. And for the next generation, begin the family governance conversation. 73% of family offices now have established boards, not because they love bureaucracy, but because legacy requires structure. Download the Unbreakable Tree Audit in the link below. Tell us in the comments, which of your branches is the weakest right now?
Do not wait for the storm to test your roots.
Secure your canopy today for a peaceful tomorrow. Follow Tiny Mike Big Wisdom for your weekly dose of financial confidence.
And timeless wisdom for modern life.
A single tree is a landmark, but a thicket is a fortress.